The story of modern money doesn't begin with currencies, banks, or economics textbooks. It begins with a lie. A lie told so quietly, so strategically, that more than a century later, the world still believes it. A lie that says our financial system is the result of open debate, democratic principles, and transparent policymaking. But the real story is darker. It begins on a cold November night in 1910 when 7 of the most powerful men in American finance boarded a private train under fake names, traveling under the cover of silence toward a secluded island off the coast of Georgia, a place called Jekyll Island, a place where the foundations of today's global money system were written in secrecy, a place where a new financial empire was designed long before the public ever knew it existed. Imagine the scene: a private railcar with shaded windows, specially attached to the train at night so no one could see who boarded it. The staff was told not to ask any questions. If they did, they were fired immediately. Every man who stepped into that car had been warned. No last names, no public conversations, no documents left behind. They were to disappear from the world for nearly 2 weeks. Their families thought they were on a simple hunting trip. The public thought they were resting. But the truth was different. They were about to decide the future of money for every man, woman, and child in the United States and, eventually, the world. The America of 1910 was not stable. Banks collapsed without warning. Panics erupted regularly. A rumor could take down an entire financial institution overnight. People didn't trust their banks, and banks didn't trust each other. The panic of 1907 had nearly destroyed the financial system. Crowds lined up outside collapsing banks. Factories shut down, loans dried up. The US government had no central bank to intervene. So one man, J.P. Morgan himself, had to use his own money to stop the meltdown. The nation realized it had become dependent on one banker's goodwill, and that terrified the powerful. This was the backdrop when a senator named Nelson Aldrich quietly gathered a select group of financial elites. He didn't ask them for opinions. He invited them to rewrite the entire American monetary system. And so they traveled south, toward an island so private that even the servants were carefully selected. An island where America's wealthiest families had built their winter mansions, far from the eyes of journalists and politicians. An island built for luxury, but now used for secrecy. Their arrival was planned with military precision. Their identities were concealed. The press was misled. Even the men's wives didn't know the truth. They stepped onto Jekyll Island not as public figures, but as ghosts. And once the doors closed behind them, the work began. The men at the table represented the biggest financial powers of the time. Paul Vergerg, a German-born banker with deep ties to European central banks, the only man in America who truly understood the workings of a modern central banking system. Frank Vanderlip, president of National City Bank, tied to the Rockefellers. Henry Davison, a top partner of J.P. Morgan. Charles Norton, Benjamin Strong, and Senator Aldrich himself. They weren't there to discuss ideas. They were there to construct a new system, a central authority over money, credit, and banking. Something the United States had avoided for nearly 80 years. Something the public feared. Something that bankers desperately wanted. Something that politicians secretly preferred. Something that would give the few control over the many, quietly, permanently, and legally. They began with a single question. How do you create a central bank without calling it a central bank? Because the American people despised the idea. They remembered the corruption of earlier attempts. They feared giving financial power to elites, so the men crafted a design hidden under layers of complexity. They drafted a system that looked decentralized but wasn't. They wrote a structure that gave the illusion of government control, while real control rested in private hands. They proposed a national banking system that appeared democratic, but whose architecture was built by bankers for bankers. Paul Verberg became the mastermind. His experience in Europe allowed him to craft a blueprint the others could not. He wanted a central bank with the power to issue currency, stabilize financial panics, and influence interest rates. But he needed to disguise it. So he spent hours walking up and down the island's small beaches, rewriting drafts, adjusting language, making sure the plan could pass public scrutiny without revealing its true nature. The rest debated fiercely. They argued about the number of regional banks, the control structure, the power of private banks, the flow of money, the enforcement of reserves, the relationship between government and the system they were building. They shouted, they disagreed, they compromised. But one thing was clear: they were building a machine that would outlive them all. A machine that would become the beating heart of the American economy. A machine the public would never fully understand. For 9 days they ate together, worked together, and slept in the same club. No journalists, no phones, no records. Every man knew the consequences of exposure. The plan would die instantly. The public would revolt. Congress would panic. Trust in the financial system would collapse. So silence became their greatest weapon. When the meeting finally ended, they left Jekyll Island exactly as they arrived, quietly, separately, anonymously. No one could suspect they had just written a plan that would change the world. They told friends they had been hunting. They told colleagues they had been resting. They told the public nothing at all. The document they created became known as the Aldrich Plan, named after the senator to hide the banker's involvement. It was introduced in Congress with patriotic language, promising stability, growth, and economic protection. But behind the scenes, the same bankers lobbied aggressively, pushing the legislation into the hands of politicians who barely understood what they were voting on. 3 years later, on December 23, 1913, while most of Congress had gone home for the holidays, the Federal Reserve Act was passed. America now had a central banking system, but one unlike any other in the world. A system designed in secrecy. A system built on private influence. A system that could control interest rates, money supply, and the banking structure of an entire nation. A system born from a meeting the public didn't even know had happened, and so the Federal Reserve began. Over the decades it grew stronger. During the Great Depression, it failed spectacularly. During World War II it financed the war machine. During the 1970s inflation crisis, it redefined the value of money itself. During the 2008 crash, it bailed out the financial world. And during every crisis, its power expanded exactly as central banks historically do. Today it controls the cost of borrowing, the supply of money, the stability of markets, and the value of every dollar in circulation. Every credit card, every mortgage, every business loan, every investment move, every interest rate, all trace back to the system designed on Jekyll Island. But the darker question remains: who does the system really serve? Supporters say the Federal Reserve protects the economy, stabilizes markets, and prevents panics. Critics say it manipulates currency, creates inflation, and transfers wealth from the public to financial elites. Supporters say it's independent. Critics say it's unaccountable. Supporters claim it works for the nation. Critics argue it works for the powerful. But the truth is more complex because the system was designed to be complex. It was never meant for the public to understand. Its structure is intentionally layered. The language it uses is technical. The decisions it makes are behind closed doors. The mechanisms are invisible to ordinary citizens. Inflation is silent. Interest rate changes are subtle. Liquidity injections are hidden in spreadsheets, but the impact is real, and the consequences are enormous. Every time inflation rises, the value of your savings falls. Every time interest rates jump, your debt becomes heavier. Every time banks are rescued, the cost is pushed onto society. Every economic boom is fueled by decisions made in boardrooms. Every crash is softened or worsened by the same hidden hands. The system touches every aspect of life, yet most people never question where it came from. They never ask who created it. They never learn the truth behind that meeting in 1910. The Jekyll Island meeting is not just a historical footnote. It is the origin of a quiet architecture of control. Money is not neutral. Currency is not simple. The system is not accidental. It is engineered. It is constructed. And it serves those who understand it, not those who live inside it unknowingly. To truly understand modern economics, you must go back to that island. To that train with covered windows. To that room where 7 men whispered over papers and drafts, designing a mechanism that would outlast their names and shape the destiny of millions. They built more than a central bank. They built a framework of power. A system where crises become opportunities. Where inflation becomes a tool. Where debt becomes a weapon. Where money becomes a form of quiet control. And the most chilling part, the system is still evolving, still expanding, still pulling the strings of global finance. The decisions made in that secret meeting still echo in the rise and fall of markets, in the strength and weakness of currencies, in the gains and losses of ordinary people. Those men are long gone, but their creation lives on, powerful, silent, and deeply embedded in the world we live in. And the question for us is simple. If the system that controls our money began in secrecy, shaped by a handful of men with everything to gain, then how much of what we believe about money today is actually true? Or are we still living inside the architecture of that hidden plan without even realizing it?